Hello everyone, and welcome to SUNUP. I'm Lyndall Stout. As we close out another year, it's always a good time to pause and take a look back at the past 12 months, as well as look ahead at what may be in store for the next 12 months. Joining us now for our annual SUNUP Roundtable are my colleagues and friends, Kim Anderson, our crop marketing specialist, Daryl Peel, our livestock marketing specialist, and Larry Sanders, our ag policy specialist. Gentlemen, it's always great to get together as we kind of kick off a new year. Let's start by looking back at some of the things we observed and talked about in 2016, and my goodness, this is one for the record books, especially when it comes to politics. Larry, we have to start with you.
Life's an adventure. It's been an adventurous year. Actually, in spite of what all the talk shows have said and some of the hype in the headlines, we are ending this year in very good levels for the general economy. It's the best it's been since the economic meltdown of 2008. Probably the dark side of this is that commodity prices aren't where we'd like them to be, and the strengthening dollar has mixed signals, but unemployment's down, interest rates remain low, the general economy is growing at the fastest rate it has in a while, so it's been a good year.
How about you, Daryl? In terms of livestock markets, what are some of the observations and kind of trends that we saw in 2016?
Well, 2016 continued. We've been on a tremendous roller coaster ride the last few years, with production reaching low levels in 2014, 2015, and record high prices. And then coming out of that, lots of adjustments. We've seen huge adjustments down in prices in 2015 and through 2016, including a third quarter that was just dismal in terms of kind of a bearish psychology. And this industry really went through a lot of transition to kind of get used to the idea that we're in a growing supply scenario. We're really in the first herd expansion. We're in the third year of herd expansion, but it's the first real expansion we've had in about 20 years. And so that has led to a lot of sort of soul searching on the part of a lot of people to get used to that idea and that we're going to be in large supplies. So we've seen a lot of adjustments, a lot of challenges for producers. We had a nice rally from that third quarter low in the last part of the year, which sets us up, I think, in better shape to go into 2017, kind of knowing what to expect, and at a market level that I think most folks are pretty comfortable with at this point.
Kim, I can't even count how many times I asked you in 2016, are we going to see wheat prices go up? Are we going to see wheat prices go up? That kind of was the question of the year, if you would.
Well, I think if we'll back up, 2016 was a continuation of a reallocation of our assets, of our land. We saw an increase in the summer crops, the corn, the sorghum, the soybeans. We saw less wheat planted acres. We also saw less canola in 16 than we had in 13, 14, or 15. But what we're going through in the crops right now is an adjustment period as we're reacting to these lower prices. You've got wheat prices below the cost of production for the first time in years, probably since about 2008 would have been the last time we had them down in this area, and the producers are adjusting, and they're doing their budgets, they're crunching their numbers, and we're seeing some shifts, and we started to see those shifts. You came into harvest with wheat about $4.50. It got down to $2.50. It's back up to just above the $3 range. Larry, you talked about that, the value of the dollar. If you go back to 2012-13, you've seen a 37% increase in that value of the dollar. That's a 37%, could be. I don't think there's a one-to-one relationship there, but it could be a 37% decrease in our prices. And if you start out with $6 wheat, you're talking about $3 price shift there. In other words, rather than having $3 wheat, if that dollar value was down in that 70, 75 index level, then we could be looking at $6 wheat. So there's a lot going on in the crops. There's adjustments going on our asset allocation. And you know, cattle, I think we're going to see some of our cropland, the poor cropland, go back into pasture for your cattle.
That's right. You know, given the way the wheat market looks and all that in Oklahoma, it was kind of a tough year to get wheat pasture established in the fall of 16. But you know, again, it's our best prospects for a little bit of return. So and still through the end of the year and maybe into January, I think we're going to continue to see some cattle go out on wheat in anticipation of grazing it out, because that's really the best chance we've got at this point.
And another thing we saw, and it comes back into your policy there, is I don't know when the last time producers used the commodity loan program. I mean, they forgot about it and had to relearn how to use it. And I think, you know, the Farm Bill's coming up relatively soon to rewrite part of that.
The discussions are starting again. We've got a couple more years of the current Farm Bill, but it's time for people to start paying attention to that again.
Well, the other thing that's going on in the crops is that it was cemented in. It was that our prices, especially for wheat, but partially for corn and soybeans now, is determined on the world market. You look at our wheat prices and wheat production around the world, 27 billion bushels. We've had a 50% increase in world wheat production since 1987. Meanwhile, the United States average production's been going down, went down about 200 million bushels. We're on a world market now.
So Oklahomans have to plan for that, right? Producers, we have to manage with that in mind, right?
We'll be talking about risk management more in a little bit, but you just look at 2016, fuel costs were about as low as they're going to be. Interest rates were about as low as they're going to be. And those are basic factors in production that are going to be changing.
We'll talk more about what to expect in 2017 coming up, but first here's Glenn Selk in Cow-Calf Corner.
As we're about to enter into a new year, I think it's a good time to look ahead as to some of the key things that can affect our cow-calf operations across Oklahoma. And first, the one that's on everybody's mind is the changes taking place with the Veterinary Feed Directive. It, of course, is the thing that's changing the way that producers would go about getting medicated feeds that can be taken out to cow herds in order to protect them against such things as anaplasmosis. I would really encourage you to go to the SUNUP website. That's sunup.okstate.edu. And there we've got a show link to one of the previous presentations on SUNUP earlier in December, when Dr. Whitworth spent some time going over this veterinary feed directive and the changes taking place as of January 1. Other things that I think cow-calf producers want to start taking a look at in 2017 is how long their calving season is. This is one of the places where we can make some real improvement over time and improve the efficiency of our herd. We're all aware that costs are getting higher and higher, and we're trying to get a control on those costs. Well, one of the places where I think we have some cost wastage in some of the Oklahoma herds is by having a long breeding and therefore calving season. If we can have all of the cows in about the same stage of production, then we can feed late gestation cows and early lactation cows according to their needs and not be overfeeding those that might be in earlier stages of gestation or open for that matter. The third thing that I'd like to mention that I think we really need to take a look at with some of our cow herds is cow size. This is something, of course, that Dr. Lawman has visited with you on SUNUP on past occasions, but it's one of those things that over time I think has kind of gotten away from us in a few cases. Take a look at this graphic. It is one that just compares the energy needs of a 1,250-pound cow giving a little extra milk as compared to an 1,100-pound cow giving just average amount of milk for a beef cow. And what it basically boils down to is over a year's time, that larger cow giving more milk requires 34% more energy. it's very, very hard for her to actually produce 34% more calf per cow than it does that more moderate-sized cow. Well, as we look to 2017, I think those are three things that we need to be aware of, and some ways that we can start to work to make our herd a little more efficient and perhaps in the long run make it just a little sounder in terms of the bottom line. Hey, we look forward to visiting with you again next week in 2017 on SUNUP's Cow-Calf Corner.
Let's take some time now, gentlemen, to look ahead to what 2017 may bring for Oklahoma producers. Kim, let's start with you.
Well, we're looking at a lot of uncertainty, and we're looking at relatively low prices. You've got record world wheat stocks, you've got high corn stocks, soybeans, you've got relatively high stocks, but you've got some an attractive price there with $10 beans right now when you got $3 wheat, $10 beans, and $3.50 corn. Beans looks pretty good. Like I mentioned a while ago, the producers are putting pencils to what they're going to do. You know, they've got to decide if they're going to harvest the wheat or graze it out. I think they're still looking at that situation. If you look at the weather maps right now, it looks like we're projected to have average moisture. We'll wait and see whether it's above or below average. We know the one thing, just like on most of us Outlook people, we're wrong when we say something like that. But there's a lot of decisions to be made, and we're starting at a low price survival position. One question that the producers are asking is, how long is it going to take us to get out of this situation? And with wheat, it's possible that we could have bad weather and we've got to lose some foreign crops. That will be in the August, September, October time period of 17. But the general consensus is it's going to take at least 2 years to work out of the wheat problem. With the corn, we could get out of that faster because you got the ethanol market. The United States is still a very large player in the corn market, so we could get higher corn prices. Then you've got soybeans. General consensus is right now we're going to have significantly, maybe 3 million more acres of soybeans planted, 2.5 million than we did in the past. So I think I could see soybean prices coming down, corn prices going up, and it's just a wait and see what happens in the foreign countries for wheat production to see what's going to happen for wheat.
Daryl?
You know, we know what's going to happen kind of on the supply side. The cards are already laid with increased cow herd in 2014 and 2015 and 2016, although we're waiting for the final data. You know, we're going to have more cattle coming through the system. We're going to continue to see beef production higher. In fact, we're going to see all of the meats higher. So we know there's going to be supply challenges in this market going forward. And you know, at the same time, on the trade side, in 2016, we saw improvement in that trade picture with exports increasing, imports decreasing, and we expect that to continue in 2017. Obviously, there's some uncertainty now with lots of things changing, potentially some policy changes that could impact that trade. We really just don't know yet, but assuming we don't see any major changes, we expect to see that trade picture continue to improve, and that's despite the fact that I do expect the dollar to continue strong and continue to be a headwind. But despite that, we really think that will continue. Again, there will be more, not only beef, but pork and poultry as well. So the impact on prices potentially comes down to the demand side. Both domestic and that international component will be very important. Retail beef prices started adjusting down really in late 2015, a little bit in 2016, but it's a slow process. Frustratingly slow a lot of times for producers. And that will continue in 2017, and the ability of those retail prices to adjust relative to the increase in supply that we know is out there is going to determine just how much price pressure there is on cattle prices and beef prices in 2017.
Larry, 2017 on the policy side, there's so many what ifs. What do we kind of know for sure, or at least we can kind of, you know, plan for?
You know, we're leaving behind perhaps the best general economy we've had in 9 years. And it's possible we could be sitting here a year from now talking about the general economy going in the tank again. And here's why. The major theme is going to be tug and pull. The new Trump administration is going to be tugging to get us in fiscal stimulus. They want to have more spending in defense. They want to have more spending for things like immigration reform, and they want to have tax cuts. Those things tend to heat up the economy. The monetary policy controlled by the Fed has just announced that they have every intention of shifting away from economic growth toward managing inflation, and they're going to be starting to raise interest rates as they just have done recently. So we may see a percentage point or more increase in interest rates over this coming year. So they're going to be pushing to slow the economy down. Trump administration pushing to speed it up. His push for trade agreements is going to be wanting to reduce trade until he can get things worked out. And we've had this big momentum going in trade where we've been breaking records, and I think there's likely to be a slowdown in trade because of that and the strength of the dollar.
Lots of things shifting, changing, and we'll talk about how to manage through all these times in just a minute. But first, our Mesonet weather report.
In today's Mesonet weather report, we're going to review air temperatures for 2016 a month at a time, and Gary's going to review our rainfall through the year. Our temperature maps show the departure in air temperature from Mesonet's 15-year monthly averages. 0 are locations that were average for the month. Positive numbers are warmer than average conditions. Negative numbers are air temperature averages on the cool side. January average air temperatures hovered right around the 15-year average with lots of zeros and a scattering of minus and plus ones. The heat was turned on in February. Monthly average air temperatures were 5 to 9 degrees above average. The warmth continued in March with temperatures 2 to 5 degrees above average. The warmer conditions pushed winter wheat and canola growth. Temperatures were close to average in April, with some slightly cooler areas in the west, average areas, and slightly above average areas in the northeast. May was cooler across the state, 2 to 4 degrees below normal. Those conditions were good for maturing wheat and canola. June was a mix of cooler temperatures in the southwest, average conditions, and warmer temperatures across most of Oklahoma. July was on the mild side with air temperatures average or slightly above average. August was a surprise with temperatures 2 to 3 degrees below average in large portions of the state. There was a switch in September with lots of warmer areas 1 to 4 degrees above average. The warmth intensified in October with temperatures 4 to 7 degrees above average, and the warmth continued in November with temperatures 3 to 6 degrees above the monthly average. The fall warmth was great for maturing summer crops. Here's Gary with a look at 2016 rainfall and drought conditions.
Thanks, Al, and Happy New Year's to everyone. As usual, I'm going to concentrate on drought for the year-end wrap-up. So let's start with the 2016 rainfall. As you can see from this departure from normal rainfall map, now this goes through December 14th, but we're going to end up, barring any unforeseen huge storms at the end of the year, about 4 inches down across the state on average, which would end up being about the 36th driest year since 1921. And you can see where the big deficits are across eastern Oklahoma and central Oklahoma, and also up into northwestern Oklahoma. Now looking at the drought monitor, we have this map for 2016. This shows the coverage, the percent coverage of drought across the state throughout the year. Now ignore the yellows. Those aren't drought. Those are simply abnormally dry conditions. So it's the browns and the reds that we're looking at. And as you can see, we started out the year with a lovely 0% of drought. We did start the year out dry, though, for a few months, and we ended up with 32% of the state in drought by April 12th. And then a nice wet spring in much of the area. By June 14th, we were once again without drought. And then the long, steady rise as Mother Nature shut the spigot off and we went without moisture or good moisture across portions of the state. And so by the end of the year, at least by December 13th, we were up to 72% of the state in drought. If we go back and take a look at those individual drought maps at those points, we can see on the April 12th map with 32% of the state in drought, you can see that's mostly concentrated up in northwestern Oklahoma. And then, of course, we had a very nice wet spring. We get to June 14th after that, all that moisture across the state of Oklahoma. And then, of course, we had the escalating dry weather through the end of the year. And we ended up with 72% of the state in drought, with the worst drought across southeast through central Oklahoma, and then also the northwestern quarter of the state through much of the panhandle. So once again, we have to hope that the beginning of 2017 brings better things, and that means moisture, whether it's rain, snow. We'll take whatever we can get. That's it for this time. We'll see you next time on the Mesonet Weather Report.
Hi, welcome to Shop Stop. Today we want to talk about a couple methods of drawing ovals.
So let's say you want to make an oval to make a coffee table, or just make an oval pattern for whatever it might be, some type of craft or something that you're working on.
The first thing you want to do is probably to draw two lines that are perpendicular to each other, and then mark your longest distance and your shortest distance between those. But then the key is how do you draw the line here? And one way to do that is with a pencil and a string, but and set a couple nails in. We have to figure out where we want to put the nails.
And so what you do is you lay your compass up there and go from your center point to the outer edge, and then you go to this intersection between your vertical component and your shortest side, and that'll lay out for where you lay your nails.
And then once you've put your nails in, basically you're going to take a piece of string and you're going to cut it and tie it in a loop around the nails and hook your pencil on it such that it goes around both nails and reaches all the way to the edge of the outer mark here. And then we are going to draw not very well because the string is stretching around. So that's one way to draw an oval.
The other way we're going to show you is a little more accurate method, and so we'll show you on a computer animation of what that looks like.
Basically, you make a jig that slides with two perpendicular slots in it, and as it pivots around, you'll have a chance to change the distance that it pivots, but then it'll also draw your oval for you.
Right, and you can mount, for example, you could mount a router on the end of your stick, we'll call it, the arm that's going around. You can mount a router, you can mount anything you wanted to, a pencil, whatever it may be, to make your oval.
That's it this week on Shop Stop. We'll see you next time.
We've had a lot of great discussion today, but the bottom line is how all of this will impact farmers and ranchers in Oklahoma. Daryl, let's start with you.
Well, I think from a cattle perspective, again, it depends on which segment you look at. Cow-calf producers obviously are in a reduced revenue scenario, so in terms of protecting returns, really focusing on cost management, as always. I guess, if I had one general, way to look at it for cow-calf producers, it's think about the value of forage and how to manage that forage. And so there's some opportunities there, but a lot of emphasis back on management and pushing the pencil. Stocker and feedlot sectors are margin operations. They can work. The feedlot one has had a lot of challenges, but I think we're getting back to a point where it can kind of work for them. Stocker industry certainly has some opportunities to work managing those margins. Price level doesn't matter as much as the spreads between what they're buying and what they're selling, and so that'll be the key for them to pencil that out and take advantage of those opportunities.
Larry, given the climate that we're in, the takeaway for producers?
As always, I think we all agree risk management is the key here, as it always is. But as I talk to producers, I say the sooner you can lock in your interest rates, the better. The sooner you can lock in your fuel costs, the better, because those are going to be going up in 2017. The Farm Bill, the discussion is going to begin in earnest this year. We're probably not going to see changes for a couple of years, but if you have interest in the livestock programs that are now in the Farm Bill, or managing crops with respect to livestock or for crop production, you have a place at the table to talk about these. Cotton producers have expressed interest, so those are going to be important factors there. We'll wait to see who the new president picks to lead his agricultural spearhead, but we already have the team in place that's going to write the farm bill, and it's the majority and minority leaders in the House and Senate Ag Committees. Those 4 people are the tip of the spear for this. So start speaking to those people about what you want to see in the next farm bill.
Everyone has a voice.
The good news is that the cure for low prices is low prices. We saw the cure for high prices from starting back in 2012. We had a high, the cure of high prices, prices are low. We've probably seen the bottom. They're going to go up. It's just going to be a matter of when. What producers have got to do is produce a quality product that people, or that the users, the millers, the processors want to buy. And if they'll produce a quality product, that price will go up, and it will pay them the cost of production, and it will pay them a profit to raise that.
There you go, Kim. Thank you all very much. It was a great discussion today. And of course, our annual tradition after we sit down together and have this discussion is to have a year-end SUNUP toast. Gentlemen, thank you all so much for supporting SUNUP. And thank you to all of our viewers for being a part of our family in 2016. And we look forward to being with you again in 2017. And of course, we have to thank our friends here at the Morrison Cafe for being wonderful hosts today. That does it for SUNUP. I'm Lyndall Stout. Happy New Year, everyone, and we'll see you again soon.